Let's look at oil tankers. First off, read this disclaimer carefully, and do your good deed of the day by liking and subscribing. So we go here to the economic signals, and then we go here to oil tankers. So only 38% here from the 52-week low, and we have seen a minus 24% pullback. So definitively there's been a weakness here. Maybe it opened up some certain opportunities. So Scorpio Tankers, 94% here from the low, minus 35-ish from the 52-week highs. Okay, so let's have a look at Scorpio. So here is their website. Here you can see one of their tankers. So latest news, Scorpio Tankers is proud to announce the publication of our 2020 Corporate Sustainability Report. Yeah, here is the big picture weekly data points. Clearly this stock has been in a pretty substantial downtrend. Hypothetically, purely hypothetically, if we were to go from the current level and travel a bit up to get above this level, 63%, 155%, and all the way up here, we are talking about 675%. Obviously, that is just playing with percentages. But it goes to show you how, buy low, sell high can generate enormous alpha if the low is formed. You could make a very strong case that we are forming a long-term inverse head and shoulders pattern, potentially. This is a pattern that is in development. We have something that looks like a left shoulder, something that looks like a head, something that could become the right shoulder. The reason why I find it more interesting to look at patterns that are in development than those who have completed is that, if you do, consistently wait until you have, fully formed inverse head and shoulders pattern, the problem is that, if you miss buying at the low of the shoulder or, of course, the head, then the total gain you get will be substantially lower. Because it is much easier for the stock to make a big move from the low than it is to make a big move from the breakout level. Because, the difference in market cap, becomes, more substantial. And you also have the issue in that the big bears, those who have huge short positions, they will get very aggressive and get into certain schemes when these patterns have formed. So when you do have an inverse head and shoulders pattern, all of a sudden, for some mysterious reasons, some downgrades comes out. Those things do actually happen. Yes, there are. There are, friends, buddies helping each other in the market. It's just the way it is. That's why it is what it is. You could argue that we have the green 50-week moving average potentially helping us here, looking at the daily data points. We did lose the 200-day moving average, which is not ideal. The 20-day could help out. Yeah, but I think we need to look at some additional data here. The thing is, okay, so let's look at these indicators. So now we have weekly data points. The distance from the 20-week moving average, it has been further in the past, but there's also been quite a few times where this current distance has been bought here by the bulls. Looking at the RSI, we have been further down in the past, and there is certainly some weakness still here on the MACD. Going to the daily data points, when we look here at accumulation distribution, it does seem like we are forming a bit of a floor there. So that's potentially interesting. Looking at these other indicators, RSI and the PPO, so we are in the sort of like in the neutral zone on multiple of them. When we go here to the seasonality, it becomes, more interesting from a bullish perspective, because we do see that, yes, September tends to be mediocre, but we do have this strengthening into November over the last 10 years. This clear strengthening into November. November tends to be very strong, average 7.4%. And here, over the last 12 years, there's this very clear seasonality that tends to be favorable for the bulls. So seasonality, it does lean bullish. Looking here at Finviz, we did recently bounce here from this trend line, but we do have some moving average resistance above us. It's just the way it is. Looking here at price targets, so the stock is currently at $16. So Bank of America, they did downgrade the price target to $15, so that would be bearish. But Hasey Wainwright, they do have a $28 price target. And also Stifle, but that is from 2020, they have a $30 price target. So it's a bit mixed, but the average here is bullish when it comes to the price targets vis-a-vis the current stock price. Looking at Saks, we do have a number for sell, which is obviously that's bearish, but we do have an A value and B growth and B momentum and a VGM of A. The industry rank is in the top 31%. Industry is transportation shipping. We do have a 2.48% dividend. So you could, when you view here the Saks rank in context of the style scores, you could argue strongly that we might be approaching peak pessimism. So yeah, I would say that there's something very interesting here with the price. The inverse head and shoulders pattern potentially in development. You could also argue that we have some horizontal support levels back here and here. So these blue arrows on the weekly data points show the horizontal support. Given that it is happening simultaneously as we have this moving average support in the form of, potentially support in the form of this green 50-week moving average, yeah, I think this is interesting from a bullish perspective. But as always, you do want to have a stop level in place. Though where you place your stop is very contingent on your time frame. If you are, an aggressive swing trader, then you obviously will have a much tighter stop than someone who is looking at this from, a multi-year perspective.